What if you could own just one single brick in a skyscraper? Or maybe just one brush stroke in a priceless masterpiece? Sounds kind of like science fiction, right? Well, today we're going to break down a technology called tokenization. It could actually make that happen, and in the process, completely change what you and I think of as an investment by unlocking the value of, well, pretty much everything. All right, so here's the game plan. We're going to start with the basics. What even is a real asset? Then we'll get into this huge problem called illiquidity. It's what keeps most people out of the best investments. After that, we'll look at how an old idea is getting a serious high-tech makeover. And of course, we'll dig into how all this tokenization stuff actually works, what's so great about it, and what could go wrong.
First things first. Before we can even talk about tokenizing anything, we have to get on the same page about what an asset really is. And trust me, this simple little distinction, it's the absolute foundation of building wealth. Getting this right is the key to understanding everything else we're about to cover.
So, what is the difference between an asset and a liability? It's a question that sounds simple, but honestly, it trips a lot of people up. But the answer? It's actually super straightforward and incredibly powerful. You can forget all the complicated financial jargon because it really just boils down to one simple question. Which way is the money flowing? Okay, think of it like this. An asset, that's something that puts money into your pocket. A great example is an apartment building that's kicking off rent checks every month. A liability, on the other hand, takes money out of your pocket. Your car, for instance, with its monthly payments, gas, and maintenance costs. See the difference? One is literally an engine for building wealth, while the other is just a constant drain on your finances. Right, so when you hear people in this space talk about real-world assets, or RWAs for short, this is exactly what they mean. We're talking about all the valuable stuff that exists in, the real world, not just as code on a computer. It's the tangible things you can actually touch, like buildings and fine art, but also the intangible stuff, like the patent for a crucial part inside your microwave. Okay, but here's the catch. There's a massive, massive problem with almost all of these incredibly valuable assets. It's a problem that's kind of like a pair of billion-dollar handcuffs, and it's been locking everyday people out of the world's best investments for centuries. So let's take a look at this apartment building. Picture it. It's a huge, high-quality asset. It's pulling in steady rental income month after month after month. I mean, this is exactly the kind of thing you'd want to own a piece of, right? But for the average person, it's got one giant problem. That problem? The barrier to entry is just enormous. You can't just stroll up and say, hey, I'd like to buy one apartment, please. Or even just one window or a single brick. No way. You either have the, tens of millions of dollars to buy the whole thing outright, or you are completely locked out. You get zero, zilch, no access to any of that value. And there's a word for this in the world of finance. It's called illiquidity. All it really means is that you can't turn that asset into cash quickly or easily without losing a ton of its value. I mean, think about it. The building is worth a fortune, but all that value is literally trapped, handcuffed inside the brick and mortar. For most of us, it might as well be on the moon. Now, here's where things get really interesting, because this exact same problem, we actually solved it. We solved it for big companies over 100 years ago, with what is, no joke, one of the most powerful financial inventions in human history. And that invention was the stock market. Seriously, just think about it for a second. 100 years ago, if you wanted a piece of a company like Coca-Cola, you had the exact same problem as with that apartment building. You'd have to be a Rockefeller to buy the whole company. But the stock market completely changed the game. It took these massive, single, illiquid companies and did something brilliant. It chopped them up into millions of tiny tradable pieces. Get this. Coca-Cola created 4.3 times billion shares. By doing that, they transformed the company from one giant, untouchable thing into a super liquid asset. Now anyone, you, me, anyone, with just a couple $100 can instantly buy or sell a tiny slice of ownership in one of the biggest brands on the planet. That's what it did. It totally democratized access to the value of companies. So, a token is really just the next step in that brilliant idea. It's like a digital stock certificate. Or maybe an even better way to think about it is like a digital deed for ownership. But here's the crucial difference. Instead of just representing a piece of a company, a token can represent a piece of ownership in, almost anything. Any real-world asset you can possibly think of. Okay, so that all sounds great, but how do we actually do this? How do you create one of these digital deeds securely? More importantly, how do you make sure that a little piece of code on a computer truly represents real ownership of a physical building? Well, the answer lies in this really clever technology called blockchain. Okay, so what is a blockchain? Don't let the fancy name intimidate you. At its core, it's just a shared digital record book. But here's the key. It's an immutable ledger. Think of it like a global notebook that thousands of people are all looking at the same time. Once something is written down in that book, it can never, ever be erased or changed. It's there forever for everyone to see.
I heard a great analogy for how this security works, and it really stuck with me. It's like this. Imagine millions of people watching a prisoner's cell 24/7 through their doorbell cameras. It'd be really tough for him to escape. And that's exactly it. With millions of digital eyeballs, all watching and verifying every single transaction on the network, trying to commit fraud becomes next to impossible.
So let's walk through how this actually works, step by step. Step 1 is all about the legal stuff. You take that physical asset, our Austin apartment building, and you place it into its own special legal company or trust. This keeps it all clean and separate. Step 2, you actually create the digital tokens on a blockchain. Each token represents a tiny share of ownership in that new company. Then, step 3 is the public offering. The tokens are sold to investors, just like shares in an IPO. And finally, step 4, the magic of the blockchain takes over. Every single time a token is bought or sold, that transaction is carved in stone permanently and transparently on that public ledger.
Okay, so that's the how. But the really important question is, so what? Why go through all this trouble? Why create these legal companies and fancy digital tokens? Well, the answer is that the benefits this unlocks are, frankly, transformative. Let's break down these benefits because this is where it gets really exciting. First up, fractional ownership. This means you don't need millions of dollars anymore. You can own a $100 piece of that multi-million-dollar building. Next, increased liquidity. You can buy or sell your little piece of ownership 24/7 on a digital marketplace, instantly. Which leads to greater access. This blows the doors wide open for everyone. Investments in things like private companies, real estate, and fine art, stuff that used to be only for the super rich, are now potentially available to all of us. Then there's efficiency. These things called smart contracts can automatically do stuff like pay out dividends or rent income right to your digital wallet. This cuts out tons of middlemen like brokers and title companies, saving a lot of money. And finally, transparency. Every single owner is recorded on a clear, public ledger for the entire world to see. No more mystery about who owns what. And listen, this isn't just some far-off, futuristic theory. It is happening right now. There was a guy in Sherman Oaks, California, who literally tokenized his own house. He created a digital token that represents ownership in his actual physical home. I mean, just think about the implications of that. That's the first step toward a future where you could sell, say, 10% of your house to raise money to start a business, and you wouldn't even need to talk to a bank. But, of course, it's not all sunshine and roses. Like any powerful new technology, this whole idea comes with some pretty significant risks and a lot of unanswered questions. It's absolutely crucial that we look at both sides of this coin. So on one hand, you have all these incredible benefits we just talked about. But on the other side of the ledger, you've got some serious risks. For one, smart contract vulnerabilities. What if there's a bug in the code that a hacker can exploit? Poof, the money could be gone. Then there's huge regulatory uncertainty. Governments are scrambling to figure out how to even classify these things, let alone regulate them. There's also the risk that this specific blockchain technology becomes obsolete. What if something better comes along in 5 years? And maybe the biggest risk of all is the custodial risk. Who actually holds the keys to the physical apartment building? Who has the paper deed? And can you really truly trust that they will honor your digital token if things go sideways?
So we're really at this fascinating crossroads. Think about it. The stock market unlocked the value of companies and completely reshaped our economy. Tokenization has the potential to do the exact same thing, but for everything else. For real estate, for art, for patents, you name it. It could create a world where the value locked away in all these things is finally accessible to everyone. The potential is just staggering. But the question that leaves us with is a big one. Are we really ready for it? Are our laws, our financial systems, and are we ready for a world where everything is investable?